Hello, today is February 18th, 2023. We always start with our disclaimer, go over our calls, and make some predictions. So my trading plan for Tuesday, February 21st, 2023. Please remember my calls can be wrong. Any trade you make should be at your own risk. After Thursday's close, we looked for the pattern Friday with the early high, which is this. Monday should have the early low. Pattern tends to be a rally day with a high in the final hour, and it's somewhat negative that we didn't get a high then. We couldn't close over these midday highs. Now, you can do it early Tuesday instead. Tuesday's open can substitute for Friday's close, but right now all we have is a 38.2% retrace of the drop. We're stopping at resistance. We're not hitting a high in the final hour. We normally do, and we have a lower MEJT target of 4,058.92. So if we don't gap up smartly on Tuesday, that's my call. And this is a negative picture. You gap up, you gap and overtake this high, that negativity goes away and the time frame for this price printing goes off the table. Now I had good price support either at Thursday's close or about 8 points at Thursday's low or about 8 points under it, and I was looking for a recovery, but that call was killed before the open according to my rule because we gapped sharply where I didn't want us to go. Now this is what we said, and these are the patterns I look for next week. We said we were at support from this gray line and we'd have to gap under it to break support. Well, we did. I didn't want us to, but we did. We said that everything was dependent upon this low holding because it was the 50% retrace and that didn't hold. So right from the open, the idea is killed. I make a distinction between calls which are killed and calls which are wrong. Calls which are killed don't cost me any money. I make these calls when the market closes and I don't know what's going to happen overnight, and overnight the picture changed, and so I don't have to act on the plan. Calls that are wrong cost me money, and a call that's killed doesn't. Well, right now we have this A and this B, and I think we broke support here. We still need to confirm it by going at least 1 cent under Friday's close. But if we do, one place to look for this wave red C to end would be where it's equal to A, which is 3859.42. It's not the only price, but it certainly is a reasonable one. Early on, MEJT said we had an optional target to undercut this dashed line. We were up here. That certainly worked. Said this drop was false, would retrace. That worked. Now says this rally's false, gives us a target of 4,058.92, most likely by Tuesday's close, and unless we gap up smartly, that's my thought. Now we had good support at this low. We had support from the FOMC announcement price in December. That's that green line. We had support from this green trend line that goes back 3 years. So we did have support, but we've tested that support 3 times, and the more times you test support, the more likely it is to break at some point. And I don't really have a wave count compatible with this drop being over. I did have some before we broke support, but not anymore. It's possible to count this as part of a third wave. It certainly looks like it. I had to redo my count. You always have to have your erasers handy when you do these counts. This is like a one-wave structure, and I was having it as part of a three-wave A, but it doesn't break any rules if you have it as a 1. And then you could still have 2, and then we'd be in a third wave, which isn't over. Now, you can't say if this is the end of wave 3, and that's 4 somehow. I mean, it's equal in length to this wave 2 if you measure from here, but I can't measure from there anymore. I mean, this could be 3, and this could be 4, and there could be one more wave down, but it also could be wave 1 of 3, which would take us significantly lower. And either one, I think, is a valid count at this time. It now looks as though we're going to break because we broke support, and C is going to be equal to A at around 3860, we'll say. So we'll pencil this in that we're in a third wave down of some degree, with at least a possibility we drop over 200 handles from here. But that doesn't mean we have to drop Tuesday. Doesn't mean you won't. But we'll work with this count until something else comes along. Signals are mixed, we use these rules. Tuesday's pattern has early low, doesn't mean you won't gap up. There's a lower MEJT target, unless we gap up smartly. The rules call for it to print. We gapped under significant support on Friday, and if it's confirmed by trading under it, that should be the low, not the close. No, close, sorry, I was right. Under the close by 1 cent. This should lead to lower prices before the current decline ends. If it was bullish, we gapped down, hit a lower low, and closed over intraday lows. So if we don't gap down, we should see higher prices even if we don't close higher. But it's negative. We hit a lower target. We have a lower target, and we stopped right at the Fibonacci retrace. Now, undercutting Friday's low would break a major trend line, take us much lower, and I don't have a wave count compatible with this decline being over. So I suspect that before long, that low is going to fall. So it's the pattern with the early low. Signals are mixed. We've stopped at resistance. If we don't clear this fast, we'll probably clear the lows here pretty fast. And if we do clear the lows pretty fast, it breaks a major trend line and should take us much lower. When support breaks, it tends to break in grand style, and I have support breaking on Friday. All we need to do is to go under this close by 1 cent, and I think that's going to happen. And that's today's call.